It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Monday evening, October 19th, 2015. Cruising our way through here. Last couple weeks of the month of October. Don't forget, Halloween is right around the corner. Don't be the last one to pick up that Halloween costume. In tonight's newsletter, I'm going to remind you again tomorrow, right? You know it's my favorite holiday of the year. In tonight's newsletter, hope you guys had a great weekend, by the way. Crude oil is bearish this evening with a spike in channel, which means our plan is to stay patient, waiting for those measured corrections on Tuesday before looking for the next big leg down. How about the S&P? The E-mini range bound with a bullish bias this evening, which means we'll be looking for bear traps to catch those sellers on the wrong side of the market. How about the gold? The yellow metal is range bound with a second try from the sellers this evening, which means we have an important line in the sand at 1172 to be using tomorrow. We'll be looking for proof on that for gold. How about the euro? The euro is range bound, another range bound market, also with a bearish bias this evening. Our line in the sand on the euro, 13.52 for the sellers to keep control before the buyers will take it right back to the euro's highs from today. As you guys can see, we got a plan for crude, S&P 500, gold, and the euro. We got a plan for you guys going into Tuesday's session. Before we jump into our chart for tonight, I do want to remind you all to make sure you're watching this trading video right now on our trading blog at sidewaysmarkets.com. Couple of reasons. If you're watching the video on our YouTube channel, there's a link in the description of the video, and then it'll take you over here to our trading blog. First of all, if you're not a member of School of Trade, not an advanced member, and you'd like to get a free pass to come out and test drive our live trade room, you can grab that in the upper left-hand corner. In the lower left-hand corner, you can register to be a member of our newsletter mailing list. All I need is your name and your email address. Then make sure you check your inbox to verify your email. Then you'll never have to worry about missing another newsletter ever again. Right below the video tonight, you'll see a spot to download all the charts from today's video. Right? How nice is that? You can have those charts ready for use tomorrow. And then don't forget, on the right-hand side, you can register as a trial member. It's not the same as your free pass. Join our trial membership on the right-hand side. Learn more about what it means to be a member. And don't forget, I've always got someone standing by 24/7, 365 to give you guys a hand. Once again, I hope you guys had a great weekend. We're back to work, though, this week. We've got housing theme this week. Central bankers are meeting Wednesday, Thursday, and Friday. It's going to be another busy week in our live trade room. Don't forget, we open up our live trade room with our students here at School of Trade at 8 a.m. Eastern Standard Time, Monday through Friday. Look forward to seeing you guys there tomorrow with me. How about some crude this morning? Or should I say this evening, right? It is just a little bit after the morning time here, even in Los Angeles. Crude is bearish with a spike in channel, which means our plan is to stay patient, waiting for the next measured correction on Tuesday before looking for the next leg down. We'll be looking for the buying opportunities during the correction, but our focus will be following that trend, looking to sell up around those highs of the range while watching for a failure of this spike in channel, sending us all the way back to where we came from today. So as you can take a look here, couple things you want to see on this chart right now. First of all, the big thing here is there is a definite spike in channel down. It's a strong move down. And then, of course, you can see this channel we found now. Now, remember, you guys are experts on spike in channels. We know that a spike in channel, it's somewhat challenging for a new trader unless you know what you're looking for. The spike down says strength. It tells us to definitely stay to the downside for the highest probability trades, right? Spike and channel down. It screams strength, but it also tells you that the best trades are going to come after a correction. And so we have that spike and channel down, that strength down is the reason why this, what I call is a lazy channel, reason why this channel is so lazy. We're going to wait for a measured correction, and usually that measured correction goes back to the base of the channel, right? This is pretty textbook. Spike and channel, bearish spike and channel. It says the high probability trades are going to be short, but when? After the initial sellers, the ones that sent the price lower, they're going to have to take their profit. There are going to be some bargain hunting buyers down here, and this should result, again, in a measured correction back higher, right? Measured correction, members, don't forget, we talk about that all the time, right? A, B, C, D patterns are very, very common. So are, two tries here from buyers and sellers. So where we're looking for the correction to go to is going to be back at the base of that channel. That's the most important area right now. Right now, it's that $47 a barrel. That's going to be your important area. I'm going to be looking for opportunities tomorrow to nibble my way up to that high, but I've really got to be careful when I do that because why? The bearish trend, right? So we can definitely look for short-term buying opportunities during the correction, but remember though, when you're trading during the correction, every trade is treated as a scalp until proven otherwise, because with a strong bear trend, at any moment the bottom can fall out of it and we can really start tumbling fast. So don't be too aggressive during that measured correction if you're going to be buying during the correction. What we really want to be watching for is going to be for sellers getting trapped on the wrong side. That's going to be the easiest money on the way back up here, right? Look for sell traps, look for bear traps where you can trap those sellers trying to get a little bit too aggressive because they're not aware of this spike in channel. And then we'll be looking for that 47 area up top here. This is really where the sellers are going to come back in. They're going to have to come back in. I'm going to look for buyer failure at the high to sell that, right, to sell that high back down. If they can't hold it though, where does a spike in channel failure go to? To the beginning of the spike, right? If they can't hold that 47, get a very strong likelihood we go all the way back to where we came from, which is right around that 47.5. So again, leg number one right now, step number one is going to be short-term buying opportunities during the correction back up to test what is ultimately the second part of this analysis, which is this trading range. We tumble on down, then we start going a little bit sideways. It's not much of a range. You really had to look closely to find that range high at 47 and the range low at 46.39. So if you look at this through the eyes of a range, bearish bias into the range, trap low, up to the high, trap high, back down to that low, right? That's how we're going to trade these trading ranges. Very simple strategy. We teach it all day long in our trade room at School of Trade. I'll be happy to teach it to you guys too. Just come out and join me tomorrow morning in the trade room. It opens up at 8 o'clock in the morning. But again, if they can't hold this area though, that's going to give us a clue here now that we're going to rotate from this range up to the high of the next range, right? So it all comes together very nicely. Spike and channel down. I expect to see a correction back to the base of that channel. The base of that channel also happens to be at the high of this trading range. You see where I'm going with this? So we're definitely expecting a rotation back higher. How high will we go? Well, that's what we're going to have to be watching for tomorrow. We're watching for, again, up at these highs, I'm going to be looking for the buyers to fail. That's the best way to trade a spike and channel. Because when we go back to these highs, the buyers will have forgotten about that bearish spike down, which of course is why the spike in channel can be so challenging. Wait for the buyers to fail, sell this thing back down to target those lows, and then we're going to have a measured move, A, B, C, D. That'll be our final target waiting for us. Possibly end of the day tomorrow, more likely on Wednesday, but we'll see how that goes tomorrow. And then again, if the spike in channel can't hold the correction, it's going to likely go to the failure. And if it goes to the failure, look, all it is it's a trading range expansion. That's all it is. It's a range expansion up to 47.61. It all plays out very, very nicely. Short-term bulls up to 47. Wait for more information at 47. Buyer failure at 47, sell back down. Seller failure up at the high, right, to buy back up. We'll be watching this market in real time tomorrow. Two very big pieces of this right now. We've got that bearish spike in channel and, of course, the bearish bias on this trading range. Watch out for those measured moves, measured corrections, channel rotation, and of course, overshoots and undershoots. We'll be watching for those counter trend traps and volume pullbacks tomorrow to find those easy trading opportunities. Don't forget, guys, you don't need to do this stuff on your own. Come out and see me tomorrow morning in the trade room. How about the S&P? Now, the S&P is a little bit funky here right now. There's a lot on this chart. There's a lot on this chart here, and really I'm going to call this a range-bound market with a slight bullish bias to it. Really, the bullish bias comes from last week. right? Remember this from last week? We jumped all the way up. We were looking for a deep pullback. Didn't get the deep pullback late last week. We're talking Friday late last week, right? So now we're going sideways. We definitely have a bullish bias to it. We're seeing higher highs. We're seeing higher lows right now. But you have to look at this through the lens of a range-bound market. So the E-mini S&P, range-bound, bullish bias this evening, which means we're looking for traps. When you see a trading range, you want to discount the channels, right? Discount those channels, and you want to really focus on traps at the highs and the lows. Our main focus is the trading range, but we have this phantom channel. Okay, now these phantom channels, the reason why I call them phantom channels, and you're going to see a few of these today, this is a phantom channel. Why do we call it a phantom channel? Because it's a range-bound market. So even though I'm going to have to respect this channel, it's not my number one priority. My number one priority is to buy that range low. My number one priority is to look for sellers to fail at the high and buy that, right, buy the pullback to that range high. This is a range-bound market. It's got a prior bull market going into it, so it's definitely got a bullish bias to it. And then the good old brains we have, most of us have at least, I can see that channel, right? I can see that channel, but I'm telling you, these channels, though, this one might be important, but you want to remember, though, when you've got a range-bound market, don't give those channels too much weight. Most of the time, they just end up being traps. Most of the time, you're going to see buyers come in, try to buy that channel low just to see it come even lower and buy the range low, right? So it stops out the buyers, finishes the rotation down to the range low, and then buy that range low. So that's what I mean by you got to be aware of the channel. We're not going to use it, though, right? Let's put it that way. We're not going to use it unless we see it actually come down, hold that channel low, right, and keep going. If we see it hold that channel low, I'm going to look for sell traps, look for sellers trying to sell, and then we'll be a buyer from there tomorrow. So definite bullish bias, but it's a range-bound market, so I'm going to be a little bit cautious around those channel highs and lows. Again, just because you have to discount the validity of the channels during a range-bound market. What happens is you get a lot of traders that put way too much emphasis on a trend channel, and they wonder, and again, a good example of this would be as it goes down to that low, you buy that low, it keeps on going lower, and the wise traders who do know this is a range-bound market, they're waiting to buy that trap at the low, right? They're waiting to see sellers try to sell and buy that trap at that low. So we get a phantom channel on it. We're not going to be able to put too much emphasis on it, which means we're looking for traps around those channel lows. Look for the buyers trying to buy it, look for them to get stopped out, and then we'll get the best buying opportunity here. Looking at a range-bound market right now, we're looking at failures at the highs and the lows. So as we go lower, I'm looking for seller failure to buy that low. As we go lower, I'm looking for seller failure to buy the pullback to the high. We've got measured moves overhead. They're going to make for some excellent targets for us. Measured moves overhead. That'll make for some excellent targets for us. We're expecting range rotation. And we're definitely going to be using the 2-try rule. As of right now, we've got try number 1. We'll be looking to see if we can stay above that range high. If we can't, we're going to rotate back lower, and then we'll look for a buying opportunity again. So we're buying the pullback to the high of the range, using seller failure there. Remember, the name of the game on range-bound markets is failures, right? Failures. In this case, with this bullish bias, we're looking for seller failures. That's our number one priority for tomorrow are going to be seller failures at the highs, seller failures at the lows, and that's going to give me the easiest money, the most consistent. Again, discount that channel. Don't worry too much about the channel, but definitely if you're really good, you'll use that channel against the buyers and sellers looking for traps. And of course, we'll be doing all this together in real time tomorrow morning. Guys and gals, you got your plan for the S&P. Stay to the bull side. And remember, failures is the name of the game for tomorrow. How about some gold here? Gold is range bound with a second try from the sellers this evening, which means we have an important line in the sand at 72.2 to use for proof of a bearish market for tomorrow. We're going to be looking for short-term opportunities back into the range lows And then we're going to be watching for bear traps at those lows to buy the lows with a target back up at the highs. If the sellers do not hold these lows, what lows? 72.2. If the sellers can't hold these lows at 72.2, we're going to go right back up into that range, and we'll see a range rotation target back up to those highs. Here's another example of a market that is clearly range bound. Well, I shouldn't say clearly. It's just the problem is it doesn't look like a trending market. I know we're seeing lower lows and lower highs, but what's up with all this stuff right here? That doesn't look like a trending market. It really doesn't. Trending markets have definite personalities to them. They feel like they're on a string being pulled lower. This one doesn't feel like that. This one feels like we went down, found some range low, went up, found some range high, and then whoops-a-daisy, collapsed right down for the first try. Sellers tried twice now, which means as long as we stay below that range low, we're going to be bearish going into tomorrow's session. But that's where the party ends for the sellers if we can't stay below it. And then here is a very good example of what I was talking about when I said a phantom trend line. Take a look at these trend lines going down, right? It looks like a bear channel, right? And it is a bear channel. But again, with a range-bound market, you know you're going to get sellers that are going to try to sell that high. And that's where those smart traders here are going to be watching this area right around that high. Now, don't get me wrong, guys. The sellers might hold that high. They might. But the odds are not in their favor. So if they can't hold it, that's a great spot to buy right into those seller stop losses, which are buy orders now, to take you right up to the high of that range. And then possibly, again, expecting to see buying opportunities up to the line in the sand. Look for buyer failures to keep selling that low, right? Keep selling that down. I'm expecting, though, that those buyers are going to be able to bring that price above that 72. If that's the case, it goes to the phantom trend line. Again, I call it a phantom trend line because it's a range environment. We know the odds are not very good that this trend line is going to hold. You're definitely going to see some sellers try to sell that phantom trend line. If and when they fail, I'm going to be there to buy into their stop losses to finish the move back to that range target back above, possibly all the way back to where the week began, up around 1182 area, right? Okay, so now you know this is how you really like to use these phantom trend lines, right? You're expecting to see price go back, and you're going to see sellers try to sell the high of that channel, right? Channel rotation. The problem is this is not a trending market. This is a range-bound market with a bearish bias to it right now, okay? So what are we looking for here for a range-bound market? Got my notes off of the right-hand side here. Failures at the highs and the lows. I'm looking for sellers to fail to buy back in. As we go back up to these highs, right, I'm looking for the buyers to fail to sell it back down. Remember, just like we said on the S&P, when you're seeing a range-bound market, failures are the name of the game. We're going to look to fade the range highs, fade the range lows, and fade the range expansions, right? Price goes lower, fade that range expansion back towards that range. We go up, fade that range expansion back down into the original range, right? Fade the range expansions. We're expecting range rotation. Price goes up, down, right? Inside that range, we do expect to see some range rotation. The volume profile you can see right now is very balanced, right? Very balanced. So again, we're expecting to see a move back to that line in the sand. If the sellers can't keep it below, we'll look for buying opportunities back up to that high. And don't forget, we have our 2-try rule. It is in play right now. So that line in the sand is very important here at that 72.2 for the sellers to keep control of this market for tomorrow. Now you've got your plan there. Now you've got your plan here on the gold. Let's wrap it up here with the euro for tomorrow. The euro, also a range-bound market, now with a bearish bias, you can see. Now, this is a kind of an interesting one here because you actually got on the euro, you didn't get that trading range until later on in the process, right? Now here we are rotating, but really if you look closely, you can see there's a little range here That gave me the range expansion, and then boy, oh boy, it just lined up perfectly. So right now we have our initial trading range. We've got one try by the sellers, two tries by the sellers. That means we got our line in the sand here now, just like we did on gold at 1352. We're looking at range rotation. I'm expecting to get back up to that 1352, and that's where the sellers are going to have to take control. They're going to have to show that they've still got control here. I'm looking for sell failures back above 1352 up to that range rotation target. Looking for price to go up, sellers try and fail. Seller failure, remember, range-bound market. You're looking for failures at all these range levels. So rotation target from the buyers, back to 1385. If we hold, we go back down to 1319. That's going to be the big clue we're looking for right now for tomorrow on the euro. So we're range bound with a bearish bias this evening, and our line in the sand at 1352 for the sellers to keep control before the buyers take this price back up to today's highs. The sellers have tried twice. They've tried twice to get this move going lower out of the original trading range from earlier on this week, right? From earlier on today. Two tries means they've got to keep below that range low at 1352. 1352 is my line in the sand. If those sellers can't hold that price below 1352, we'll immediately start looking for buying opportunities up to that range high, possibly all the way up to the range expansion at 1418 for tomorrow. If the sellers can hold 1352, our plan is to use the measured moves and range expansion targets as we go lower. Notice these really line up nicely here. A, B, C, D, A, B, C, D. So again, targets waiting for you below 1319, 1302, 1286, and we'll find some more tomorrow morning in real time with all the rest of our students here at School of Trade. Now you've got a plan here for the euro, right? Euro range bound with a bearish bias until we get above where? 1352, and then we're bullish up to that 1385. On the gold, finishing up here once again. Gold is a bearish bias as well, as long as we stay below what? Below 1172. If we get above 1172, you know where we're going. Phantom trend line, then back up to rotation target above at 77.3. S&P right now is range bound with a bullish bias. Remember, careful about that phantom trend line at that low. Definitely be looking for seller failures on the S&P. And then on the crude right now, we got to stay patient if you want to be a seller, but I think you're going to have an easy job with some short-term, again, they are long-term counter-trend moves here, but short-term correction back up to that 47 before we look for that next leg down on the black gold. Guys and gals, don't forget, download the charts for today below today's video. Register for your free pass. Register for the mailing list. And don't forget, if you have some extra time here, head over to schooloftrade.com. I'll encourage you, test drive our membership with our free trial. We get the best free trial in the business, guys and gals. You're going to learn more with me in 1 week on my trial than anywhere else on the interwebs. I can guarantee you that. Don't forget, contact us here in the office if you want more information about our 3 levels of membership. I've always got someone standing by to help you guys out along the way. There's no question too big or too small for us here at School of Trade. We've been doing this longer than anyone else on the planet, guys. Celebrating, it'll be 12 years running our trade room here at the end of this year. Boy, oh boy, that time flies. I want to thank you so much for being here tonight. My name is Joseph. I hope you guys had a great weekend. I hope you had a great weekend. Great time of the year to be alive and kicking, I'll tell you that much. Great sports on TV. The weather's changing out there. I saw some snow on the ground this weekend. I know, sorry, I didn't mean to mention it. It was just summertime. It was just, I still have the tan lines. All right, I know, we're having fun with you guys. Get out of here. Rest up for tomorrow. I'll see you tomorrow morning at 8 a.m. Eastern Time. Don't forget, share this information with a friend. Give me some feedback below the video tonight or send me an email at jj@schooloftrade.com. My name is Joseph. I'll see you guys tomorrow, 8 a.m. We open the trade room. If not, tomorrow evening, same time, same place on our trading blog. Adios, amigos. Bye for now.